Monday, March 25th, market analysis. Stan Ehrlich, good morning. About 10:03 California time, just a little after the middle of the trading day, the traditional hours, 6:30 to 1 o'clock California time. Well, we have a little bit of a dip in the S&P 500, a minor dip down. There was a small gap up on Wednesday to Thursday, and it started to get closed maybe completely on Friday, which was a down day. And now we're seeing a little bit more weakness today. It's not very much. I'm still trying to justify a correction down to 503 at a very bare minimum, 497 range, but that is probably too close. I really think the next downside move, and it's going to be a fairly big correction, but it's still a long-term bull market. Could be down to about 478 or even a little lower. That's where the significant support is, 477. And that was the trading range that we saw back starting in the middle of December until about the middle of January. On the way down, there are a couple three face spots, or even maybe more, where the market could stop going down and turn up, but we need to go down. This is absolutely an incredible move since October. There have been no significant moves down since October. That is not normal, very unusual. Every time the market slipped for 1 or 3 or 4 or 5 days, it went right back up into new high ground, and that would be a larger amount of time on the downside in the last about 5 months. It just has been extremely strong. Won't last forever, though. And if you look at the 1-minute spider, you'll see that we have a reasonable dip to come down and close that gap. And it was finished being closed this morning. And then we've come back up just a little bit from the low early this morning. It's a small trading range day, not a lot going on, fairly quiet. Down, about $0.75, give or take a little. And the E-mini, we're down from the opening a little, down about 10 points, which is a big point, give or take, on the spider. And typical, still looking for a break. And the E-mini, 49.06 is the major support area at lower levels, but it just won't start yet. Very strong situation. If you're long and you have wider or larger trailing stops, you may have been able to stay in this trade since October. I don't know, but that would have been fantastic. I'm a top and bottom picker, so my swing trades or scalps don't last that long, and I'm decent at picking tops and bottoms. Not lately. Can't prove it lately on the E-mini or the S&P indexes. They just won't quit. So going to the 1-minute E-mini, you can see the market has slipped off from Thursday's high during Friday and during today fairly steadily. Almost looks like a downward sliding channel. And if that's true, it's a bullish pattern. QQQ. Daily chart had a small gap last week. Gap is now closed, but there's a slim chance of a double top formation in here. You got to get below the lows between the two highs and close below 432 in order to break out of the double top. That's not happening yet, but I don't know. I just am very, very leery about this market. I'm afraid that there could be a very sudden overnight break. That's kind of what I have in the back of my head at the moment, but of course it's not starting yet. Next chart, 1-minute QQQ, topped out Thursday, gap is closed now, just like the spider. Next chart, NASDAQ futures, NQ June futures contract. Possible double top. We're only dipping down here for a day or so. That's nowhere near enough to be more confident about a double top, but this is how they start. I need to get down to and close below 18,007. 18,007 in order to break out of this double top. And then we'll probably be on our way to 17,285 at least, and maybe a bit lower than that. Next, NASDAQ futures 1-minute chart, choppy morning. Yesterday afternoon rather, started around unchanged, went up a little, but then made a modestly lower low for the last 3 days, and then popped back up again. We are down about $0.50 at the moment, very little. Next chart. And then the Russell, also having trouble in general, a little below previous tops. And there is a bearish engulfing that would have, could have, should have been a ER brand new sell signal, but it wasn't overbought. Close, but close doesn't count. But everything else was there. And it did come down nicely for about a week. But now we've come back up to about the same price levels and having a little trouble, like I hoped for, like I expected, like I talked about, in close to overbought conditions. And we'll see what happens here. I still can't get it out of my head that this market is very dangerous to be buying at these levels and under the circumstances, and it is about to have some sort of significant correction. It just doesn't seem to want to start. And the Russell, 1 minute. Okay, bonds. Down day, slightly higher high. We've had a few days in a row now up, and that is since it stopped going down in a support area. Fine. Right about that. Now, a down day doesn't really mean too much to me. I could get a test of lows, another test of support levels. It could maybe go up a little bit more. I'm in favor of going down some, but not a lot. Just testing the support area again. I can't rule out the support being broken, but I still don't think it's going to be a really big move down. Same for the 10-year notes. A little lower today at the moment, minor reversal, didn't even get up to resistance at all, still pretty close to support. The bottom of the support area held real well. This does look like a potential double bottom, but again, we have to get above the high between the two lows for the double bottom in order to have a breakout, and then it would predict the possibility of making new highs for the whole move up. But we're between a rock and a hard spot at the moment, so I've got to wait. 1 minute, 10-year notes, rallying a bit in the last few days. Crude oil. I repeat, and I said so the day after I had the signal, which was a bad signal. I was shown, because of the data feed, not my fault, of Connectic, that NinjaTrader charting displayed a bearish engulfing on the 20th of March. So I said that we had a bearish engulfing sell signal, which was not true. When I realized the data was wrong, I said so the next day, which was again on Thursday of last week. The 20 was bad data. I apologized. Nevertheless, the sell signal that I thought I had on the 20th, it kind of worked. It went down some on the 21st and then down again on Friday. So even if you did take the advice, which was incorrect, you would have had some sort of a profit potential explanation point. So today is an up day. We're still in the resistance area. We're not too far from overbought, but again, we're not there. We were overbought only a few days ago. I favor down because of the previous overbought a few days ago and the top of the resistance area, although we're popping up a little today. We'll see what happens this week. Heating oil. A rally today, not holding it very well, momentarily around the middle of the range. The bigger picture is a lot of sideways movement. Lately, basically the same thing. I'm sorry to say, I really can't be very adamant about heating oil. Gotta wait. RSI extremely neutral, 46. What about natural gas? We do have the gap here. This is a gap from a couple of days ago. When we gapped up this morning, I'm sorry, the gap was this morning. And I'll just move this around for a little bit. The high of Friday, we opened way above that. The low of today is obvious gap, and I'm putting the rectangle in that gap area to fill in the space. So we need to come down to the low of the rectangle, the high of Friday, in order to close the gap. No sign that's happening yet, but I expect it to happen this week, probably in the next couple of days. Otherwise, this support area at around 1.614 and a little higher, 1.646, held pretty well. And today is above and staying above the highs of the last week and a half between these two lows, and back up to some resistance again. At resistance, small gap to close lower, go down, close the gap, bottom out, turn around, come back up into the resistance area. I think that's my best bet. Next, gold. Big rally up, held pretty well, didn't really hold the next day last Friday. Today's a doji inside day with a little bit of an up move, 16.3 at the moment. I think gold could work higher, but not much. We're overbought about a week and a half ago, extremely. Now, we made a new high in price, but the indicator did not. That's a divergence. It's not my best tool, but it is worthwhile taking a note of. It tends to imply the market's building a top of some sort. Sometimes you'll get a shoulder and a head for a head and shoulder top out of this. That could happen. Remains to be seen. I'm going to pass on a gold comment at the moment. Silver, blatantly obvious, gigantic bearish engulfing, brand new ER sell signal, official on Thursday of last week. Friday dropped off more. Momentarily, we're basically going sideways. I'm short from Thursday of last week. I like the way it looks. I'm looking for a move all the way down to 2290, and we're at 2480 at the moment, 90 almost. So a pretty good break. Take maybe a week or two. Next, we got platinum. Little rally today, trying to rally out of the support area that it's dropped into the last 4 out of 5 days. So let's see it start to get above 90 or 922.8 on a closing basis, and then I can be a little more confident about a rally up to resistance. Right now, it could very well be starting. I like the high, or the low rather, in the last few days is well above the previous lows. I also like the fact that it's in a support area, and we're up a little on the day. So I'm trying to justify staying slightly friendly, but not real positive about this. Copper, new low, but bouncing in a support area. Could turn around. Trend is up. We've made new highs recently, and for quite a while, and they stayed above those highs that were important from way back in August. So we made new highs actually for almost a full year, well, 11 months, 10.5, and we're slipping back to support. So intermediate, longer term, I have to be friendly because I think it'll bounce out of support. Short term, a little iffy, could dribble down a little bit more, but probably not too much. We're neutral on the RSI, very much so. So for the next few days, a little lower, a little higher. Next couple of weeks, I think it's going to be going up some. And we've got soybeans. Now, you guys know that on the average, I've been saying for months and months that the grain market has no longer-term bullish appearances, potentials, I suppose I could say. And basically, I've been correct until, a couple of weeks ago, around the beginning of March, we have some turning point. But there's still no real bottom here. I don't see any big formation. I don't see anything that's going to drive it a lot higher. Yeah, maybe a broad double bottom, but I'm skeptical about that. We did break it. It stayed down there. And now it kind of looks like a rally back to resistance in a general sense. Maybe it'll even go all the way up to 1270, and we're 1206, which is pretty darn good. But ask me about 3-6 months from now, lower. That's what I think. Next chart. Bean oil. We've rallied. It got to a little resistance, and now it's starting to, on Friday and today, sink off a little. Momentarily, we're popping back up some. Pretty good. But the bigger picture has a lot of potential troubles at higher levels. And I think over time, another few weeks, again, let's say another couple of months, we're going to be back down to these lows and break the support area, testing the lows of what will be, if a month or two from now, a year earlier. Next chart is meal. I got the same thing to say. Yes, support has held, but there's so much trouble above the market price-wise, resistance-wise, I just can't justify anything super bullish at the moment in any of the grains. We're looking at corn. We had a great trade. The system ER signals bought the bottom of the move to the day. That's why I developed it. It's a top picking and bottom picking, or close to tops and bottoms, time and price worth trading system. So that trade worked great. We're out. And matter of fact, we're trading right now almost exactly where the offset was on March 14th. So if you're still holding, no advantage or disadvantage at the moment. Support looks like it could hold again, but again, there's so many reasons to believe that this market doesn't have upside potential at the moment. Lack of a major long-term bottom, except for the, can I really call this a double bottom? I mean, this low was very close to the previous low, but the previous low was 2.5 years ago. That would be one of the biggest double bottoms I've ever seen. So I got to say no. Next chart, wheat. Hey, we got a double buy signal. One signal on March 8th and one on March 11th, Friday and Monday. It's working great. We have a higher high since those two buy signals. At the moment, we're a little lower on the day. Our stop is well below the market momentarily. I probably should tighten that up some, making the STS automatically go up a little tighter. Yeah, I could do that, but I'm safe, I think, for the moment. Again, wheat, but on a 1-minute chart, broke down quite a bit in the last about 2 hours. So after a higher high for the whole move up, all of a sudden, kaboom. Now, there's no reversal here yet, but I do not want this to go down a heck of a lot more. I could allow a little bit, another 10, maybe 5 cents more, but not much. So I think it's going to hold, and then we're going to go to cattle. Great trade, just in time. On December 15th, we were almost out of range of getting a buy signal, which we did. ER1 position trade stayed with the trade. The stop stayed low for a while, which is what I want on longer term trades. And this just turned into a whopper. This was way back on December 15th. Here we are 3 months later, still long. Stop is way up here at 179 and change. And we're long from about 176, 167.40. Great trade so far. Looks like it's going to end up being great. I don't know if it's going to make more money than where the stop is at 179.60, but we'll see. Still bullish. Longer term, it's still coming down to support today. So at any time it could turn around. Not oversold yet. That would be nice. Next chart, hogs. Looking at in support, but remember my comparison last week of cotton and hogs, of all the crazy things? Cotton is doing what hogs look like they're about to do. So we're going to take a look at the cotton chart in a few moments, and it's going to look very much like hogs, but into the future, about a week and a half or something. Hogs are sitting right now at the neckline, period. This is the shoulder high that we made on January 30th. The high of the market is the high of the formation on February 22. There is exactly 16 days from the first shoulder to the head of the formation, and 16 days exactly from the head of the formation to the last shoulder high. Perfectly symmetrical timing-wise, which is exactly, I can't believe I can say this, what cotton did. That's about as rare as you can get. You don't have symmetrical head and shoulders very often perfectly. I've got two of them that are working exactly symmetrical at the same time. Now, we haven't broken out yet. I need to close around today's low or anything lower than that, and I want to get below the support area on a close in order to really feel good about this head and shoulder working completely. The downside objective is a minimum of 76.675, but there's no guarantee it'll get there. But that's how you measure the formations, and that is the expectation without any guarantees. Next chart we've got is unleaded. Now I'm going to bring over TradeStation because of the data feed from ICE having a problem with NinjaTrader at the moment. OJ. A large pennant formation developing ever since the beginning of the formation, which is the bearish engulfing sell signal. This, by the way, also was a head and shoulder. Back here on October 31st, I said bearish engulfing, we're going to go down. It went down 3 days just dramatically. And then it got oversold, or almost, turned around and went up. So I went, okay, starting to get down on an down out of an overbought condition. Fine. Went down here and got oversold. Went back up again. Right here, I get very suspicious. On this day, December 11th, if you want to go back and listen to it, I told people that I thought the market would go up to approximately this price on this date right here. I think I was 1 day too early and a little bit of price too high. It 1 day earlier than I thought had a bearish engulfing, created the last shoulder high. The neckline is drawn across that price and these prices. Well, that one right there. And then the major breakout on December 20th. The minimum downside objective was almost perfect. I drew all the lines necessary on a different contract month. This is the May OJ. It was probably, I don't know, Jan OJ, March contract that I was drawing the lines on. Anyway, done, finished. And of course, we got a buy signal at the bottom after the objective was met. Unbelievable combination. Up we go. Sell signal I just mentioned a little bit ago, February 8th. I've got nothing to say. This is a pennant. It goes sideways until it breaks out. Pennants are usually continuation formations. We'll find out whether this continues or not. It's got to close probably above today's high to do a good job of breaking out above today's high or below last week's low for a downside breakout. Next chart is the head and shoulder top in progress in cotton. We broke out great. This is about when the data feed went bad in Ninja. Sorry about that. So here it is in TradeStation, downside breakout, test of the neckline, move back down, and today we have again a new low for the move down. Currently, we're a little higher on the day. It did get kind of oversold, but not officially. So a little bit sideways to a little bit bounce is okay. But I do expect maybe by the end of the week, we're making new lows completely, any old time. The minimum downside objective is 82.90. We'll see how this pans out over the next, probably month. Next, cotton, head and shoulder top. Did I say cotton already? I did. Sugar, sorry. Sugar. Sort of a pennant, got oversold, rallied nicely, didn't get overbought. We're between a rock and a hard spot. I don't have too much to say about sugar, unfortunately. I have to wait. And we got coffee. I got to say the same thing about coffee. No breakouts, pennant formation. That's it. I have to wait. And lastly, cocoa is on a rampage. Exactly what orange juice did. I am hoping for a gigantic bearish engulfing ER sell signal any day now. Any day. We are way up there on RSI at 93. It is very unusual to see markets in the 90s on daily data charts to begin with, let alone in the ballpark of 95, which we did get to a while back. This is a classic looking blow off top. They're very tricky and very risky because when they do finally hit their highs, it is oftentimes a very, very violent move down in a short period of time. If you can catch a good short position, wow, they can be very, very rewarding. And we're back to OJ. You guys have a great day. Profitable trading to you. Thank you very much. Stan Ehrlich.